dare I say, the wonderful, wonderful, wonderful world of the collapse of crypto that has continued in the wider world. You'll also probably be seeing the appearance of a cat who is currently on top of me. Who doesn't love having Mrs. Kitty Cat around, right? So, in today's live stream, guys, what we're going to be going over is, dare I say, to cryptocurrency. Hello. Okay, Mrs. Kitty Cat, you are not helping whatsoever. So, a cat who's on my lap and it just loves to go right into the keyboard. Yes, I know, Mrs. Geek Cat. It's just so your life is just so tough, is it not, Mrs. Geek Cat? So just to kind of go over, guys, you know, the initial plan, content wise, we are going to be taking a look at our friend, the wonderful, 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 um, well, the wonderful, wonderful world of, dare I say, DeFi, and we'll see if the loyal audience members are going to show up today because I have no idea. Just kind of decided to do this as your impromptu stream. So we're gonna see what happens here. It looks like my impressions are like super, super, super down yet again, which is very sad for me since we only have 25 impressions, but we'll see what happens here. Okay, so let's actually get started with what I want to go into, which is just going to be going through some good old-fashioned coffee, CoffeeZilla. Apparently, Corey from let me see, from the wonderful, wonderful world of Prime in China is on, so we'll see that. So, yep. So let's take a look at the actual
Crypto
scammer.
Armageddon is
What's going
here.
here?
The biggest.
So the crypto Armageddon, I I really don't agree with the term crypto Armageddon. I think that's a little. I think that is a little sensationalist. Um, yeah, the crypto market has completely collapsed over the past 9 months, but the systemic reset that we're seeing is pretty reasonable just given the wider route in technology. So it's not like I'm going, oh, if for some reason this wasn't picking up my audio when I switched over to here, which is really just makes no sense. So we'll actually get started with this with FTX versus Binance. So let's get going, and greetings to anyone who joins us this fine Sunday morning. What's going on, Missy Geekette? Oh, what's going on? Okay. So perfect. So let's actually just dive into what Mr. CoffeeZilla happens to be saying here. So this ought to be interesting. And this stream is really just not getting any traction whatsoever. It's only got 25 impressions. That is just abysmal, good sir. So let's continue.
Biggest players in the world are at war. They're fighting it out, and I'm here to tell you who won and what's next. Now, I'm going to be honest, I called this yesterday. I warned you guys that FTX, second largest exchange, might be insolvent, and people called me crazy. They said, no way the guy who described all of DeFi as a Ponzi scheme could be bad. Sam Bankman-Fried, he's just too smart.
So
The reality is right now that most cryptocurrency has been, overinflated by, really, I want to say, just this just this pursuit of, extremely easy money. And the easy money has created a lot of problems. So let let's be honest with ourselves. Crypto is at best a an extremely speculative play. I think that pretty much goes without saying, and is an incredibly reasonable proposition. The idea ourselves, crypto, the idea that somehow this is going to be any different from what the vast majority of people are expecting, seems just a little silly to me. But crypto is propped up by extremely cheap money, and is just something that you need to consider. So let us continue.
FTX, after all, is endorsed by Tom Brady. What could go wrong with another celebrity endorsement? People like Larry.
Absolutely everything could go wrong with a celebrity endorsement. Like, let's just be honest with ourselves. There is everything that can go wrong. Celebrity endorsements are not how you should make investment decisions. It's real simple. Real simple. But we're dealing with a cyclical factor here where there is a lot of free money in the system, or for lack of a better term, we're really witnessing a colossal reset. The Fed rates have basically removed all of the oxygen from the room, and you're looking for things that can operate more anaerobically, or not as speculative, and that are actually set up to survive and not locked in a Ponzi scheme. One of the assets that seems to have, at least got some brains behind it, I like Charles, who's the founder of Cardano. It's more open. I think that ADA has ADA still has a lot of fun. Ethereum as a project still has a lot of interesting things being done on this, things like escrow account innovation. So it's not going to completely die. I just think that is one of the things where you have to look at the potential of the innovations, and you cannot get suckered up in this stuff, which is one of the really critical components, because without easy access to capital, business model still needs to be profitable. If you can't just keep borrowing and borrowing and borrowing and borrowing. So now let's just continue.
David backed FTX. Surely your funds are safe. Well,
they're
turns
not
out
surely
they
safe.
were actually in danger all along.
Really?
And things are looking very bad. So I'm going to explain to you this entire mess very quickly.
Okay, so things are looking very bad. Okay, let's just say things. Now, they're not looking super pretty at the moment. That would just be, my general. And things are not looking pretty. Things are not going well. So let's just take a look at what on earth we got going on.
Quick, but bear in mind this is a very dynamic situation. Things are changing by the hour. But let's get into it. Once there existed two rival crypto exchanges.
Okay, so crypto Armageddon implies the end of crypto investment. It implies the end of the world. Personally, I think this is kind of an statement. I do think it's kind of dumb. The reality is that cryptocurrency has, for lack of a better term here, it has survived longer than this, and it has done better, for quite some time. So this idea that somehow cryptocurrencies are going to go away, this idea that crypto is going to die, just strikes me as really, really fanciful. I do not think this is going to be the end of crypto. It's not going to be the end of any of these things. What is most likely going to happen is a really serious separation of the wheat from the chaff. And we're going to look at, this is a mass extinction event in the crypto space, and what we're seeing right now, the same thing extends to tech at the moment, where we're going through this is a true blue mass extinction event, and there's very little you can do but kind of just do dollar cost averaging and just kind of continue to adapt to this environment where it's now it is a winter. I just strongly disagree with the term Armageddon. I think that is, it's overly apocalyptic. It's overly, it's really, really just trying to push this, this idea home that somehow the entire crypto space is going to end up dead, which I'm not seeing that. There is still strength to projects. It's just, you're going to basically see a separation. I mean, I'll go through some of my own losses very briefly. I did just take losses for the year because I'm trying to write down my capital gains and my tax bill. And I really haven't been doing a lot of active investing, really funneling money away. That's in the process of starting to change as I'll go through more. But let's just continue here.
Exchanges, Binance and FTX, the number 1 and number 2 crypto exchanges. And their CEOs, CZ and SBF, or Sam Bankman-Fried, hate each other. That's an important part of this story. But
okay, well, it's magical that they hate each other. Again, I do like the sassy storytelling style here, but from an investment perspective, it really is one of those things where what is going on inside of the marketplace, should not, there really just should not be that much of a disturbance here. You need to look at the fact that the actual market itself, its stability really has not, it's really just not changed. There's a lot of movement. There is a lot of stuff leaning in towards a crash. But again, I just don't see this Armageddon-like scenario. I mean, things are rough. We are living currently through a recession. I mean, this is for me in my working life. Oh, it's like recession number 3. And the idea that somehow, we were in a recessionary environment because of COVID shutdowns is kind of dumb. I mean, a lot of the inflation of these technology companies was because of a massive injection of capital for retail investors, continued quantitative easing that artificially lowered the cost of borrowing, and once these projects need to actually pay an acceptable premium for risk, the attractiveness of the investments virtually disappears, and they're just not well collateralized because they're collateralized against assets that have cratered, just absolutely cratered in value. So we're in the midst of a very strong and very powerful feedback loop, that extends from the crypto, the crypto environment or decentralized finance outwards. to traditional finance as well. Capital is extremely tight, and the cost of money has gone through the roof. So these projects would be able to maintain some degree of solvency, but there really is currently within the crypto market a liquidity crisis. And this overall lack of liquidity, as far as I can tell, is really the primary issue that's impacting crypto. Where the upward trend, of speculation, you only need a very small trend, to actually be liquid. But as he's going to go into with FTX, where most of there's no liquidity, within the exchange or within the marketplace. And what happens when markets run out of liquidity is things go kaboom. And they go kaboom extremely quickly. So I think that a lot of the focus on personal attack, or really personal lines of attack. So this will be interesting as we go into this. But what really caused the collapse of a lot of these businesses is, quite frankly, it is the wonderful, wonderful, wonderful world of, I don't want to say crypto here, but it really is the oncoming liquidity crisis that has been the biggest issue within the crypto sphere. So let us continue.
Things were calm at first for the most part. They played nice for years, until recently SBF decided to take a pot shot at his competitors' attempts to work with regulators and said, he is allowed to go to DC, right? Implying that CZ was banned. Now, he didn't know it at the time, but SBF set off World War III in crypto with this tweet, and he might have signed his own funeral, because a few days later, a report came out from CoinDesk leaking FTX's financial balance sheet. And what it showed is that they had a lot of money, but it was sort of locked up in all these token projects.
Okay, so as predicted here, the issue is essentially we're running into a liquidity crisis within crypto. So this crypto liquidity crisis, poses a really, really, really big problem for Mr. How shall you say, the Mr. Sir. So let us just continue very briefly here.
They were a part of, most notably in FTT token, Solana, and other projects that they were behind. And they couldn't sell the projects anytime they wanted to. In other words, even though they had billions of dollars worth of assets, they weren't very liquid. And it was arguable that some of the coins weren't that valuable,
crisis.
so they couldn't get access to these funds immediately. Meanwhile, they had huge liabilities of $8 billion, $7.4 billion of which were loans. Now, Dirty Bubble Media, who is the person who called out the collapse of Celsius, which we've talked about extensively, picked this up in a scathing report. In it, he suggested that FTX and Alameda Research might be insolvent because all their money was locked up in these tokens that might be worthless.
So, again, there is legitimate conversation to be had around the valuation of these tokens. It's just one of those things where I definitely think, it's just one of those things where I definitely think there's just so much to consider here. And, again, this liquidity crisis is really the principal issue. And because there is not a lender of last resort or a decentralized central bank that can essentially, correct for, liquidity crunch within the network, that causes a lot of, pain and issues. So, you get the exchange runs, um, but just generally, because decentralized finance is not built into the global financial infrastructure, I'm going to probably shift over to Patrick Boyle's treatment as well as I pick up the speed on CoffeeZilla here. But again, liquidity crisis is, it's probably the biggest issue is the net cost of borrowing. Like, let's say, like, I've had my side project that I've talked about a couple of times, which is I want to open a coffee shop. Do I want to spend full time my life in my coffee shop? No, not necessarily. I just really love coffee, plus I just work there all the time. So, it's just mostly like getting an office space or a co-working space set up with like really nice coffee. It's like one of my dreams, but one of the biggest issues you run into is really the lack of it's really this lack of oh, that was a very big snore, Mr. Stinky. So let's just continue here. But again, it's liquidity. It's because the basic issue, I mean, everything without liquidity is a bit of a Ponzi scheme here.
And if everyone tried to withdraw their money all at once, the company could likely not pay off their liabilities. Now, CZ saw this and decided to take an opportunity to strike against his biggest rival.
That is true.
He announced
any
that
bank
day
or
that
any
because of
company.
recent revelations, which because of that report, quote, we have decided to liquidate any remaining FTT on our books. Now, this was massive given that FTX's number one holding was FTT. Their competitor Binance is saying that they're going to dump up to $2.1 billion worth of it on the open market, causing that price to plummet. Now, all of a sudden, you don't even have illiquid funds. You just have none of those funds. So even though CZ said that this was not a move against a competitor, it kind of looked like it was, right? Of course, he's going to say that. In reality, he knew what he was doing. Now, immediately, this stoked all sorts of fears.
So this is kind of the issue with these decentralized actors. So, I mean, the biggest issue that I have with a lot of these projects is when you look at Binance, when you look at FTX, these are centralized exchanges. And, if you look at it, when you have a distribution cluster or when you have such an outlier, in your data distribution, if you just pull that number out, it completely throws off the numbers from a statistical perspective. So just looking at these networks and analyzing them, I mean, if we were to do out a histogram or we were to do a chart of where do all these accounts fall in terms of holding, what you're going to see with most crypto is really heavy concentration by very small numbers of holders, which means that these market players have a really, really outsized influence on what's occurring. So let's just kind of dive into this a little bit more. But again, you're looking at still extremely high centralization, but the central authority has no ability to act as like a central bank. So with the governing boards here, there's really no, you still basically need like a crypto monetary fund, and it's like a reserve banking system. People are like, abolish the Fed, and that's a really stupid idea. It's really difficult to explain to you because you get into this stuff where market actors will basically make decisions based on really, emotional reasons. This isn't like a good business decision. This is, I don't like you, I'm going to screw you over. And that's how people make decisions. They don't make them in these wizened and wise scholarly ways. And, crypto itself, complains about human emotion. And, it's like we talk about zero trust, yet you're trusting these people and you're still saying zero trust. Like, that's pretty stupid. but that's just me. So,
about the solvency of FTX. And the fear spread like
it was totally
wildfire.
insolvent
Is
once
FTX
that was
the
done.
next Luna? Is FTX
Yes.
the next Celsius? And people started to withdraw funds like crazy, which honestly was the logical move to make.
Yes,
The
we're going to have a
problem with crypto
bankrupt,
exchanges
yes.
right now is that because there's no monetary insurance on your money, even if the probability of an exchange going bust is less than 1%,
That's
you still
very high.
have to take all your money out, because if they do go bust, you lose everything.
You lose all your money,
If it doesn't
yes.
go bust, you only lose a fraction of a percent on trading fees for being cautious. And so there's really nothing to risk by taking your money out, and there's everything to risk by keeping it in.
Keys.
So basically that means bank runs are extremely
Your
common these
own
days, and a lot of these
money. If you're like
they're really not
investing
ready for it. In fact, Sam Bankman-Fried
serious,
himself said that a lot
serious
of
money
are secretly insolvent, which was a bit of weird
What?
foreshadowing. But at first, it looked like
no, I would have
FTX
never guessed
wouldn't
that.
go insolvent. A lot of people said this was very unlikely, since in the past they've looked very strong. And that's what they basically said. They said, look, it's no big deal. This is all FUD, nothing to worry about. Alameda Research, who is closely tied to FTX, actually...
Okay, so with this fear, uncertainty, and doubt thing, you're a potato head. I mean, you just gotta be like the High Lord of potato heads. If you're involved in crypto at all, and this should just be the lesson to you. Hold your own keys. I mean, you can buy on a centralized exchange, but I mean, it's like generally speaking, I'm probably I'm going to pull it up just because I haven't been in a while. I haven't been into my Exodus wallet. And this is where I actually keep keys. I'm a little concerned by the potential for a Coinbase collapse. That would be my big, that would definitely be something I am. Oh, don't know where that timer just came from. I really have no idea what's going on there. But when you're looking at it, it just, it makes no sense. Keep your keys and get your money out of these exchanges, because there's no way these exchanges can prevent the liquidity feedback loop. And once they're stuck in the liquidity feedback loop, you good sirs are sorely screwed. So that's just one of those things that just drives me crazy. So let us continue here.
Responded about these leaks in their financial balances, and they said, quote, they have $10 billion worth of assets that aren't reflected there, and that also they have returned most of their loans by now. And most
the balance does not matter. The balance sheet here with most of these assets is, I'm just going to say it's utterly irrelevant. What you're really looking at is you are looking at the fundamentals related to your own, cash flow. So if they don't have cash on hand or sufficient cash reserves or the ability to generate sufficient liquidity from the protocols they've invested in, bye crypto exchange, because the liquidity engine has started to roll and roll and roll. I'm looking at, for lack of a better term here, Binance, FTX, they're some of they're the first and second largest exchanges. Whatever, from a retail investment perspective, I'm more concerned about what's going to happen, with my wonderful, wonderful buddies over at Coinbase, and that's just a general issue because I've kept, I just keep certain tokens there for convenience. It just happens to be a little bit easier for me than trying to use different protocols. But just to kind of go into it a little bit more, I am always I'm always just a little curious here, but what you are seeing is this incredibly large scale change. So systemically speaking, I guess I'm just a little doubtful about a lot of this, but let's continue here.
Shocking of all was that they offered CZ to buy all of his FTT off market for $22 each, near the current price. Now, the reason for this is obviously to show that, okay, we're not scared. We've got the money to back this up. And if you really aren't trying to sink us as a competitor, you'll be happy to do this private deal, get a better price, and not impact our price. It would save both parties a lot of headache. But unsurprisingly, because these guys hate each other, CZ wasn't having it. He said he was going to stay in the free market, signaling that he fully intended
and this is what Twitter does.
And
this is what Twitter does. Is it so wonderful?
24 hours, 30%. And not only that, reports started showing that FTX withdrawals were increasing. The bank run really was happening like CZ wanted. And this is where we have to go back to Alameda's
burn, baby, burn, right?
About having $10 billion worth of assets. Because there's some really key caveats about those claims. What are those $10 billion worth of assets?
The assets don't matter.
Are they cash? Because if they are, they're probably fine. But if there's something like more FTT token or more of Sam's other projects that he can't sell, well, that's going to be a significant problem for them when everybody's running and asking for their crypto back and they just don't have it. So
yeah, this is why
FTX was doing with
this is why you keep your crypto,
just giving it to
keep
Alameda
your keys.
Sort of acting like a hedge fund and trading with your crypto, trying to make a big return, or were they keeping your funds safe and just practicing proper risk management? Well, this is where everyone just
it's goodwill. It's goodwill on the balance sheet. Good one, JD. Good one.
This
good one.
Pretty bad. They froze withdrawals. And at the same time, the team basically...
They froze withdrawals? Oh, I'm so surprised. Nah.
And people started to circle back to old clips of Sam Bankman-Fried describing DeFi and crypto as basically a Ponzi scheme positively. And they wondered, how did any of us trust this guy?
I think of myself as like a fairly cynical person.
Okay.
Yep.
That was so much more cynical
than
how I would have described farming. Like, you're just like, well, I'm in the Ponzi business, and it's pretty good.
At no point did any of this require any sort of, like, economic case. It's just like, other people put money in the box, and so I'm going to too, and then it's more valuable, so I'm going to put more money in. And at no point in the cycle did it seem to, like, describe any sort of, like, economic purpose.
So, yeah, things are looking really grim. But
that is a very funny voice, by the way.
Locked up on FTX, and you're clinched up right now. Take a deep breath, because...
Nah, you might just...
like they might be fine. Although, it's coming from a very unlikely source.
Ooh, let's see.
Announced only hours after FTX paused withdrawals that they were going to buy them. Binance was going to buy FTX, the #1 crypto exchange, buying the #2 out.
There you go.
Well, this afternoon, FTX asked for our help. There's a significant liquidity crunch to protect users. We signed a non-binding LOI intending to fully acquire FTX.com and help cover the liquidity crunch. Now,
there we go.
I'm at a loss for words. This is insane. If you're not sure what's just happened, CZ basically set his competitor on fire by stoking rumors of insolvency and then showed up with water buckets later, basically acting like the hero, saving the day. He just bought FTX out for likely pennies on the dollar in a move that's honestly going to go down as a bit of business genius and also cutthroat strategy. I mean, this was a shark move. Now, in the next few months, you're going to see SBF and CZ try to spin this whole thing as if there's no conflict between them.
Yeah, so this is one of the other things I do want to harp on is, really just the ethics of this they're pretty non-existent here. I mean, it's kind of unethical. And there's also probably some, questions whether off this would be profiteering, conspiratorial, doing the illegal leak, competitors' finances. Um, if this is investigated, it just seems incredibly unlikely that some degree of security law. I mean, it does violate notions of fair play, of somehow having access to a competitor's balance sheet, then pulling the trigger against them. So this would have occurred most likely because of insider information, which Binance was able to obtain. That in and of itself is a massive issue. I just don't see how you're going to get into this being not illegal, or at least something that is just it's somehow okay. So let us continue. User-centric development. No, it's like all the people are on the boat and they're running on the Titanic, and the Titanic is sinking and they're trying to save themselves. This liquidity crunch, or, you're looking for essentially within the crypto space, you're going to be looking for crypto to work, or for one of these decentralized networks to truly work. You're going to need a JP Morgan-esque figure, or a JP Morgan-like figure to emerge at some point when we are discussing these things. Because, again, what are you going to do without your very own person, or at least kingpin, who can collate enough capital together to prevent these liquidity crises from actually occurring?
There was never any problems. That was just a rumor, but don't believe it. This beef was very real. Only days ago, CZ was saying that we won't pretend to make love after divorce, and that, quote, we won't support people who lobby against other industry players behind their backs. So very much, these guys did not like each other, and one of them just won the war. So the fact SBF let himself get bought out by probably the man he hates most in crypto just shows you how badly they must have been short on cash.
They were massively short on cash. There's no way
they exhausted every other option. In fact, reports
they had sufficient reserves. There's just no.
Basically, everyone in Silicon Valley seeking more than $1 billion, but that by mid-Tuesday, the hole in their balance sheet looked to
Silicon Valley doesn't have $1 billion right now.
In the end, they had to sell out to their biggest enemy. Now, what does all of this mean? Because for one, this represents a huge centralization in the crypto space. Everyone wants to be decentralized. Well, the number one buying out the number two is sort of a big problem if that's your goal. There also remain huge questions, like how they could have been out billions of dollars in the first place, and how exactly
not particularly
they were
surprising
customer funds if suddenly they find themselves at a multi-billion-dollar hole in their balance sheet after people actually look to get their money out.
Binance is predominantly offshore. FTX, I also believe, is predominantly offshore. They have made moves to really court U.S. regulators, JD. So there's a lot of, it's difficult to say whether these are truly U.S. entities. Just a lot of various malarkey that could be considered here.
It seems to be yet another lesson that you should not trust these crypto exchanges as far as you can throw them. And that no matter what their CEOs say about not having to worry about anything, there could be significant liquidity crises that they're lying to you about.
Oh, yes! Liquidity crises when interest rates have basically quadrupled. I mean, we've gone from a 0% prime rate where basically liquidity was easy peasy, lemon squeezy to get, to good luck here, good luck. I mean, a liquidity crisis is just very predictable unless you are mostly financing your operations through, all cash. And then you still maintain sufficient, credit reserves or lines of credit to overcome a liquidity crisis. But let's just finish this on up.
And on that note, I want to remind you that this deal is non-binding, and Binance can get out if the due diligence doesn't pan out, or if they just don't want to do it. So if you're invested in FTX and didn't get your money out when I and others started telling you guys that they were likely to be insolvent, it's not time to relax. Binance isn't necessarily going to save you, and you should explore all your options because your funds might still be in danger if this deal doesn't work out. As for FTX US, I have no idea what's going on with you guys. As far as I know, they just bought out FTX.com, although the deal is still pending, so who knows what's going on with that. This is just a wild end to one of the craziest weeks of crypto. World War III basically broke out, and a winner was decided. The true main character revealed himself. So that's basically it. I'll see you in a bit. I've been
that's just
super hard on a big investigation behind the scenes. I'll tell you guys more about.
So that's just one of those things where the reality is at a systemic level. Crypto is like any financial industry where it needs liquidity, and generally the way that liquidity has historically been formed is through let's just say like exchange syndicates or a banking syndicate will form. So without these syndicates, or the ability for exchanges, between projects to really, this would be, kind of we're looking at the backbone or the platform or the infrastructure of crypto. As we've seen here, biggest issue is maintaining liquidity within the crypto environment. So, you do need some sort of reserve banking mechanism with these projects, and it does stand to reason. It does stand to reason that Cardano and Ethereum both lack. They both lack the necessary infrastructure to handle these sub-tokens and mandate liquidity, but there's just not sufficient liquidity within crypto or anything backing it, where it's like there's a lot of tokens or token value maybe in excess of the actual value of the assets. So there's not a good, at an infrastructure for the system to continue properly. You do need setting any agencies, as when you're looking at farming, you're looking at the derivatives that are caused because of that. You really, the Wild West is not necessarily needs some new regulation, whether that be self-regulation or just existing regulation. But the reality is that most crypto consumers are not particularly savvy or aware of how these exchanges really operate. But you should be operating in a zero trust environment where all of these ledgers are public, and the exchanges, the liquidity of exchanges, are required to be public information if you're actually thinking about investing large sums of money, without SPIC, insurance, or any form of insurance, basically guaranteeing just a fraction of investment, or at least that your underlying securities will not be forfeited. Oh, hello. Can you hear me, sir? Can you hear me? Hello. I hope that's okay. It might also just be the suppression kicked in a little bit more. So let's just switch over a little bit. I want to
about that later, but just wanted to keep you up in the loop. All right, see ya.
Okay, so it's gonna. Oh dear. Okay. I'm hoping that is on for you now. We shall see. We shall truly see. Okay, we're gonna see what happens here. I shifted this. Just take a look at myself. Yes. Okay, this is fine. Excellent, more excellent. Okay. Now I have an echo. I just can't win, can I? Are we okay now? Are we okay? Test 1, 2, 3. Test 1, 2, 3. Testing. Testing. Hey, trusty assistant. My audio off. Gotta keep going with my audience here. It's usually I have my audio technician Andrea tell me how it is. So sorry, you're bankrupt. So it's a tolerable echo. Okay, it's a tolerable echo. JD, I feel like I'm letting you down. So look at that. Mamma mia. Mamma mia. Let's take a look at some crypto. Oh, mamma mia. This is gonna be no good. Oh, mamma mia. We're down so bad. Oh, mamma mia. We start here at 700. We went up to 700. And now. Oh, mamma mia. Oh, mamma mia. We had $190. 75% down. Awesome sauce. Oh, this has been brutal. This has been very brutal. Now, I have my own tokens. I keep these lovely lovelies in my own wallet because it is just a terrible idea. I mean, I have very minimal amounts of money in crypto. I kind of pulled back on this because I thought we were heading into, I thought we were going to be taking a 75% haircut. And I just don't see the point of taking a 75% haircut. That is my big thing. I'm just like, why? Why would you want to take a 75% haircut? It's like I've had this for about 2 years. So if we go to all time, I briefly had, a lot of money in here, but this is just kind of the history of, the position. I mean, I have definitely kept it very, 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 very low. I'm actually going to start buying again, shockingly, because it's not dead. It's not dead. And that's one of the things that I think people do need to recognize. I think that there is a lot of potential for, crypto, but I do think, you need always buy a share. But it's one of those things where I think that thanks, JD, much appreciated. Have a good one, sir. It's just like it's definitely going to be one of those things though where I am debating whether or not to re-enter crypto. It is really it's difficult to say, when is a good time to re-enter something. And again, I do keep it entirely transparent in terms of, what I'm focused on. I mean, it's more of like, I'm interested in just larger income generation than this might potentially afford me. So let's just continue here a bit. It is time for our friend, the world's most generous billionaire. Personally, I do think that this guy had quite a bit of PR, or at least public relations, going for him early on. There are a lot of continued doubts that I have about just like crypto bros or tech bros in general. I mean, you're really you're really just looking at something where people get into these environments, people get into these setups where they take on very, 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 I just want to say extremely, extremely outsized risks. And that just really does not make a lot of sense when you're trying to start investing. Survivable risk really does matter. I'm not saying you can't make any money through cryptocurrency. That has never been my position. I am very firmly a believer in the long-term prospects of decentralized finance. I just really don't like flim-flam and I'm gonna effectively just use this here. I don't like BS artists very much, who are trying to promote Ponzi schemes and outsized returns that are really just not sustainable. I'm much more interested in sustainable success and sustainable outcomes than I am boom shabam in Japan, here it goes. So in terms of like long-term thinking does begin to matter. So let's continue here with, sorry, you're bankrupt, sweetie, have a nice day. And we'll get a sense of this.
Okay, the guy you see next to me is the most generous billionaire in the world, and I found him.
The most generous billionaire ever, where you can get 10% off on your trading fees.
Fees are bad. Fees are very bad. But FTX, there are no fees whatsoever.
And if you sign up with our...
So that just sounds like a wonderful, wonderful endorsement here, does it not? That just makes everything seem so whimsical and just... Oh, so magical. I mean, it just really makes everything seem so magical for us, does it not? I mean, I am loving it. I would just absolutely love this. It just seems totally fantastic. Hello, sir. Just as one emerges, we got another one here. Awesome. So, world's most generous billionaire. My heart is, so engaged by this. I am going to enjoy this.
Link. Signing up using my link.
There are referral links. If you use my link below and the code name Tom Nash.
Oh, stop it, please. You guys are embarrassing yourselves. Listen, what a week it has been for financial influencers. Their reputation...
My reputation is still intact. I will have you know this, sir. I am a financial influencer. I am a skeptic, and my reputation has not diminished. I am fine. I am doing just fine. I am living la vida loca. Entonces, we're living the life here, but the reality is, there's a lot of flim-flam artists. There is a lot of, really stupidity that occurs within these markets, and it's really something incredible to behold. I mean, it is almost as great as, China YouTube, financial YouTube is. Really just replete with some really terrible advice. And people seem to really like to over leverage on things, which I don't really understand why you would want to over leverage, but that's just me. So let us continue here.
Have just been going down the toilet. People who promoted absolute garbage companies like FTX US and BlockFi for millions of dollars, today we're finally seeing the results, as both of those companies are basically bankrupt. And so today,
again, I just don't see this as particularly surprising when you're actually looking at what occurred. Some really terrible, or I don't want to say terrible things, but some really stupid things with like product endorsements. I mean, it's like people who endorse NordVPN when NordVPN is really not that secure a product. Just drives me a little crazy here. So there does seem to be a real need for, or at least an improvement in, what kinds of products people endorse or these crypto exchanges. Everything seems great when somebody comes and offers you a big bag, but you've sold out a lot on something like your integrity, which I just don't understand why somebody would do that, in terms of like selling out, monetizing the channel platform, which it's kind of like, okay, I have a slow beat of skepticism here, but it's generally my job at my day job to advise companies on what would be the proper investments, what are the proper moves to make. And, I just try to approach things with as much sobriety as possible. And it's very boring. I mean, it is a dry method of how to proceed. It's not super exciting. It's not sexy. But it's like, there's not as much of a real crash and burn risk to most of these things. But let us continue.
I'm calling out all the influencers who promoted it, some of whom I know, and I'm getting third wave embarrassment from it. I know it's mind-bendingly stupid to imagine that people actually listen to YouTubers for financial advice, but we all know they do. That's why they get offered these insane financial deals. And these people had a responsibility to their fans,
really
and they blew it. So
you should not listen to me for financial advice. You should make your own decisions, and you should arrive at them independently. You should think for yourself. It still amazes me because there are these sovereign citizens who I think are a good corollary, where people are basically going to YouTube law school or to YouTube investment school. And, don't get me wrong. I mean, you can get a lot of really great information online for free, but there is, there's also a lot you need to be aware of with the flim flam artists. Like Dave Ramsey has he's got a lot of information, but he's got a very rigid worldview that is not, it's not adaptable for most people. And, do you want to live your life like that? And that's something to consider. I've got an intellectual disability that pre-indicates me to extreme levels of spending. That's a problem where, if you have ADD, you're more likely to be taken advantage of by these people, because you're looking for stimulation, whether that be gambling addiction, food addiction, what have you. That's an issue. And a lot of these, there is if you go on, Reddit, you can actually get a lot of good pretty solid information from people from like r-stocks. I mean, there's a lot of good stuff in there, and there's a lot of pretty cool due diligences that get put out. But again, I just strongly recommend doing your own thinking, largely because if you're not paying an influencer, if you're not kind of going to the classes, if you're not kind of consuming the information, you yourself are the product. And, you're not the customer of this person. Their advertisers are, or the people or the product they're promoting becomes the product. So, I mean, YouTube as a long-term career, I think that is really, really difficult to muster. I'm still working on like my video schedule, all these other wonderful things. I'm a little swamped because it's Q4. But again, I do stand behind the idea of being a crypto skeptic. Not a message that is super duper popular. But I do think that's incredibly important. Now let's continue.
I want to talk about it because it's a pretty big scandal, and it involves a lot of people. I know some of them I've even done collabs with, and just honestly, it's crazy how many of the biggest financial channels took deals promoting this garbage. And honestly, none of y'all are getting off the hook today. It's smoke for all of y'all. If you do the crime, you get the screen time. I don't care who you are. So I kind of showed a bit of it at the beginning of this video, but it was incredible to me as
here's the reality of a lot of this content, and a lot of the financial content is, it's honestly, it's success porn. That's really what a lot of this content is. It is not, okay, I'm going to elevate my thinking. Gee, I'm interested in learning more about statistical presentations, talking about the distributions of the data. There is, there's just a lot of, for lack of a better term here, there's a lot of flim-flam that goes on, and, it really continues to amaze me, the amount of garbage in and garbage out that comes from a lot of these things. But let us continue into the realm of garbage thinking, because the thing is, these crypto exchanges have not been viewed as difficult. They really haven't been viewed as like hard school investments. But let's just continue here.
I looked through the archives, just how many people got bought out by FTX US. And let's face facts. The biggest reason for that is money. I asked around. The sponsorship deals were absurd. I know a guy, much smaller channel than me, making $500,000 a year, $50K a month just to promote FTX US. So I know the bigger guys were getting much more. Some of them probably deals were in the millions. So obviously that's a big reason. A lot of them
what a shock.
But I don't think that's the only reason, because I think that'd be honestly too easy to say, oh, they were just greedy, that's why they did this. I actually think it's worse than that. I talked to a lot of these guys, and they were fooled. That's the scariest part. So many of these experts who are giving you guys advice totally bought into this Sam character as this genius billionaire, right?
Okay, so I am not a good buy into it thing where I think it's a great idea. So it's like, by all accounts, I should be absolutely intrigued. I should be in love with Elon Musk. I love the technology. I love it. But I just sit here and I'm like, no. It is a basic position of mine that the opposition should be argued. You should really, the opposition should be heard. I think that is a reasonable position. But, with these product endorsements, with, spots, with these things, they want a genuine endorsement, and advertising is not a genuine endorsement. It never should be. I'm selling an ad spot. I'm not selling my opinion. Yeah, I mean, with the Sam character putting on a show, or running the circus where it's like, I'm the most. Who, me? I'm the showman? I mean, it's, oh, I mean, the thing is with with Musk, yeah. Basically, I just think like Musk, basically, just does what he thinks is cool. And that makes a lot of sense. There's no harm in doing what you think of is cool. But let's just continue to see who our lovely lovelies are who got utterly scammed. Also, I do just want to point out that Prime in China has started doing this stream at the exact same time as me after I invited him on and he never responded. So, well, bitchy. I just want to point that out.
The most generous billionaire in the world, who also happened to be paying them handsomely, of course. And I just think it shows how bad the discernment is out there making videos on how to invest. It's alarming how many people fell for this guy's ruse. And it's alarming how easy it was to convince them. Like, some of these guys believed in Sam because he drives a beat-up car.
Sam doesn't need the money to buy a Lamborghini or to buy a Rolex or to impress his friends. In fact, his car is a Toyota Corolla.
Well, by this logic, I mean, oh man, I mean, my counterpart must be like the greatest billionaire who ever lived. I mean, her car is a Toyota Corolla. I mean, damn, a Toyota Corolla hybrid. Woo! Say it ain't so, man. Toyota Corolla living. That's fantastic. This idea of the countercultural rebel who does not invest, who is, somebody with some degree of money, who cares? Who cares? I mean, let's go back to Berkshire Hathaway here, where this is the world's most boring website. I mean, this is really just the most boring website in the world. And I would argue, this is what you want to see from an investor. Not somebody who looks like they're a scruff and who kind of looks like Mr. I mean, he kind of reminds me of the Pillsbury Doughboy. I mean, I've got a little pudgy too. And for those of you who might not be familiar with the Pillsbury Doughboy, that is the Pillsbury Doughboy. He's so majestic, isn't he? Yes, I mean, Sam kind of reminds me of the Pillsbury Doughboy. So let us continue here. This will be fun.
You trust the guy more when you see the car he drives. He's worth like $20 billion or something, and he drives like this kind. I don't want to call it beat up. It's like it's an older Toyota. He doesn't even have window tints on a completely stock Toyota.
What does that?
When was this guy ever worth $20 billion? I mean, these like claims of wealth are really. Yeah, I mean, like. He might have a net worth, but I mean, when you consider the liabilities that most of these exchanges have, I just don't know where we get these numbers from. Just where do we get this bullshit? Right from? Where does it come from? Who knows? I'm my magic 8 ball down here. Okay, let's ask the magic 8 ball. Don't worry, guys. We're gonna do a highly scientific process here. Was this guy ever worth $20 billion? Ask again later. We don't know. Let's just ask again. Back. Ever worth $20 billion? Yes. Okay, let's just go back. Was it in our dreams? Don't count on it. Don't count on it being in my dreams. Okay, maybe Stephen Graham's right. This must be how these guys pick their sponsors, by the way. I have a highly scientific, very valid process. It's called the Magic 8 Ball. Yeah, so be prepared. And I'm also learning stripes with a green screen. Terrible idea. Terrible, terrible, terrible idea. Oh, it's also because we have a fleck of green. Very special here. Let's go.
That have to do with anything? What does window tint have to do with Sam's qualifications as an investor? I mean, look, it's now coming out, guys, that at Alameda Research, they were just kind of embarrassingly incompetent. And the evidence was always there, but
nobody put on their critical thinking hat. Like, nobody, like, apparently I take a year off from this, and it's like, oh. Because I was like, okay, it's time to buy a house, time to be a real person, time to get my office set up here, and, start killing it. And then, it is just like, oh man. The level of fiscal and financial stupidity that is being confronted. Well, maybe I'm getting tea, guys. Maybe I'm being a good boy and I get tea. I don't know. I hear movement. That usually means good things for me. It usually means good things. Maybe if the trusty assistant is listening.
Nobody who was selling FTX bothered to take notice. Apparently, they were too busy looking at the window tint.
Apparently they were too busy counting the money. Money, dollar bill, y'all. That's what this was all about. It was about the money, dollar bill, y'all. These are not. Oh, there's my exciting 75% loss on crypto. Yay! Yeah, 75%. And I'm being so loud. I am wrapping it up. So let's continue here.
The CEO of Alameda, for example, saying she hardly uses math at her job.
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math.
It's just beyond belief. Like, I don't want to pretend like I'm some Nostradamus who saw all this coming and nobody else did, right? I did call out FTX 24 hours before it shut down. I did call FTX US out well before, like 72 hours before it shut down. But I wasn't here with my crystal ball forecasting all of this years in advance. But that's the reason I didn't promote this. I get the same offers as everyone else, but there's no way I'm going to risk my audience, you guys, in a game of crypto among us. Like, will this guy turn out to be a psycho in a year or two? Let's find out.
Let's ask the Magic 8 Ball.
I'm not going to do that. And it's not because I'm better than anyone. It's just because I know that even though I know a little bit about crypto, I don't know enough to know for sure whether these companies are going to be around.
The odds are
the crazy thing is I think of everyone we're talking about today,
95% of the companies
I probably
will
have the
not
biggest
be
claim
around.
to crypto expert, and I would never feel comfortable saying that because there's just no.
So, I mean, there is a good warrant of humility here where you have more reasonable, humility. You've got less, for lack of a better term here, you got less capping. And a lot of financial YouTube is a lot of financial YouTube is extreme fugazi. It is not grounded in any particularly, strong point of view. You could talk about the algorithmic trading, you could talk about programming, you could go through all of this wonderful stuff. But on the whole, when we're talking about just the simple probabilities of what's going to happen, it's going to go kaboom! And that's going to be it. But let us continue.
No way you know. And so I think it exposes a big gaping flaw in this influencer world where it's not just the greed, it's just this systemic failure of people to recognize their own lack of expertise. And it's so easy for charismatic geniuses to convince these people based on
okay, just in the 2 minutes I have seen of Sam, you know, I mean, I'm Pillsbury Doughboy face myself here, but I just do not feel the charisma that, you know, is being echoed here. I feel full. I mean, my is going off. I mean, that is definitely, you know, ringing in my ears, going. And, you know, but that's just me. I mean, maybe it's just me. Maybe I'm not a massive fan of, you know, these really, you know, I want to say just really pernicious, you know, hucksters and, you know, let's just say the great deliverers of fraud. So let us continue.
Basically no evidence. Take, for instance, meet Kevin's seal of approval.
The guy's brilliant. He talks very fast, but he's brilliant, and I trust him and I like him.
Yeah.
Really? You know, I talk really fast.
I talk really fast too. Apparently I've got terrible audio quality where my voice echoes and echoes and echoes. I like Spencer's stuff. You know, hopefully Spencer's not going to come up in this little, you know, endorsement spiel. But, you know, the reality is a lot of this stuff is, you know, these are just things to continuously be aware of. But let us continue.
Brilliance is definitely up for debate, but do you trust me with all your money? Because
no, I don't trust you with any of my money. I don't trust anybody with any of my money. I manage all my own money. So that is to say, sir, that my stupidity is owned by me and me alone. So for better or worse, it's my stupid. It is my glorious, glorious pile of stupid. And if you want to join me, you should get your own Magic 8 Ball. That seems to be how most people, though, pick their YouTube financial endorsements. You know, but I don't really consider, you know, like that's the thing with Spencer. Like he's a bit odd with his channel take. Like I don't consider Spencer Cornelia to be pure. You know, I don't consider it to be pure financial YouTube. I definitely would consider it to be more. You know, it's generally more skeptical, you know, financial content. Like, I'd also say, like, you know, as like, isn't he more financial commentary? You know, so like, I'd say a lot of his videos, like some of the investigations he does, you know, some of the scam busting, you know, he kind of is like CoffeeZilla, but with a more intense, you know, but with a more, you know, just with a much more intense view. You know, just a much more intense view of things. But let us continue.
So it's just abysmal. And now that this has all come out, some of these guys are now coming out and apologizing, as they should. But is it enough? Because people like Graham Stephan now has made a video about it. Basically, he said 24 hours before FTX US went bust, like, hey, maybe you should get your money off.
FTX US has been a sponsor here on the channel for the majority of the year. This one I did not see coming. I think it's pretty safe to say.
What? How do you not see a liquidity crunch coming? Like, what? He's on the wall. I just gotta do this properly here because I'm just going like, this is. I'm just like face palm, good sir, face palm. it's just like, give me the face palm here. Obviously, most of these exchanges are doomed. Like, I would not be surprised if tomorrow you told me Coinbase went. The only thing that could really save Coinbase compared to some of these other ones is perhaps it could issue a new round of stock, and, you know, it could maybe raise money on the public markets. Again, that's highly unlikely, just so unlikely to occur. I do not see that happening, senores, and other good folk. So let us continue this adventure here.
Say as a result of that, I'm no longer working with them. So if you hold anything on FTX US, you could still take it out and transfer it to an external wallet or wherever else you please.
But how many people saw this compared to almost a year of ads? Or take Tom Nash, someone who's appeared on this channel. You know, he took a different approach and basically said no one signed up under him.
I think that you all deserve me to talk about FTX. I was working with them a few months ago for about 30 days. Somehow, during this whole month we were running the campaign, literally nobody signed up for FTX US. They called me and I was insulted in the beginning. And they said, look, Tom, we got to cut it short because we had like a 3-month plan to work together. And they said, look, we're stopping after 1 month because nobody's signing up from your channel.
Yeah, I don't know if I buy that. At minimum, these are bad arguments. Like, no one signed up for me. Or, hey, I gave you 24 hours notice. Like, it's just such an embarrassing standard for this industry, if you can even call it that, because it's just a bunch of basically random people giving their opinion about finance. And truthfully, I just think it's a big lesson, another lesson, the millionth lesson, that you shouldn't be actually taking real advice from the people who you watch on these screens.
Okay, so in terms of, it's like kind of interesting sometimes to talk about, like general qualifications and stuff. So I'm not a finance guy. I'm a market researcher. In terms of like healthcare, which is really where my expertise is. I don't really have, with like technology stocks. I'm a voyeur. I'm just here to enjoy, comment, and I find just producing content interesting. Hopefully you might have your perspective challenged, and you'll gain a useful insight. That's the best I can really hope for from this channel. But again, it's difficult because people don't want to hear, a non-committal opinion. People like stronger positions. Having extreme positions better for growth. It allows for audience clarification. And, a lot of this stuff, though, it's very predictable, and actually looking at promoting skeptical thinking, being skeptical about these ideas, or just a lot of the things that are presented is incredibly important. And, the main problem I have with a lot of financial content is, like, if you listen to a guy like Charlie Munger, you listen to Warren Buffett, you listen to Soros, skepticism permeates the work of truly successful investors. It really is their creed. It's really what they're operating by. It's really cold, hard skepticism. So let's just continue with this, because I think there's a lot of interesting stuff that we can consider. But again, why I call this Skeptic Sunday. It's kind of like going to Skeptic Church. Is the way I view this is, financial advice is deeply personal. It needs to be customized. And a lot of these guys are not purveying, financial advice that is a misstatement, because that comes with a fiduciary obligation, which I'm not promoting myself as a financial advisor. I would say I'm a researcher, and it's very fair to say that, there's information I think is useful to help people inform and make their decisions, but financial information and sharing financial information is very different than making binding, you need to do this advice, financial coaching, what Dave Ramsey does, really walks the line of being a financial advisor without actually being one, which, I think they're going to give that kind of information. You should have an ethical obligation to people to advocate in their best interest, not necessarily just in talking points that you think are great and all hunky-dory. So let us continue here.
They're entertainers, and they don't know much more than you about what they're actually selling. Now, I will say one small thing in their defense, a lot of smart people did get fooled. BlackRock was an investor.
Okay.
And for you millennials, even Kevin O'Leary got caught with his pants down.
Number one, I'm an investor in FTX International equity. Number two, I'm an investor in FTX US equity. Number three, I have accounts with FTX.
Not surprising, but this
inside of my account.
This again supposes that Kevin O'Leary is a very sophisticated person, but when you look at like most of the scams, most of the flim-flam, I mean, you're gonna be surprised. You're not gonna really be surprised here, but lo and behold, guess who shows up all the gosh darn time? Kevin O'Leary, Mr. Wonderful himself. And if I see Kevin O'Leary's mug on something, I'm like, okay, better lock my wallet in the safe and hide all my token keys, because I'm about to be parted from my dollars. I don't see a good deal coming. But let us just continue here for unos momentos.
Yikes. I guess it just shows how bad the advice out there was and how many people, so many of these financial experts, were fooled and then made fools of themselves by promoting this junk. Now, the next thing I want to talk about is a company called BlockFi, which paused withdrawals yesterday. It looks like...
Oh, what a shock. What a shock. So if BlockFi is down, you really need to be seriously considering getting your money to keys you own. So, I mean, I'm going to be transferring. I mean, it's such a paltry sum of money that I have in Coinbase. I really just don't care right now. It's like $200-300. If I start buying more ADA, I'm going to transfer it over, or I'm going to keep it in a wallet, where I own, again, the keys like Exodus. My preferred wallet that I recommend people use is, it really is Exodus. I mean, it's like, here's the thing. You're going to pay higher acquisition fees. There are going to be transaction fees. Unless you're actively involved in speculative trading, I would avoid most of these exchanges like the plague. But like I said, my preference has always been for staking. Yes, I'm still down 75%, but at the end of the day, I still own my securities and I still have my stock certificates instead of relying on those with a third party. It's like when I negotiate, I go talk to a lawyer, I go get competent advice, from a professional, and there's just things that you should be very, very careful with. But I mean, the BlockFi wallet or interest account, guess what? I've got to look at Nexo as well, because that's just one of those things that, really is something I'd continue to consider. But it's just, it's just something to be aware of, guys.
Like they're also going to be bankrupt. And I just want to talk about the influencers who promoted them as well. Here's a few clips of what I'm talking about.
I have never taken on a paid sponsorship on my channel. Please use my link to sign up to this credit card. And even though I'm not contractually obligated to speak positively about them, don't forget to grab up to $250 worth of free bit.
Oh, it's a credit card review, guys! I just got my next little video from our buddies at BlockFi. I really just don't understand why there's like the spinny, wonderful stuff. Why are we doing spinny, wonderful? It's just what people do. It's like literally like I'm just gonna be a dude with a camera. I'm a dude talking into my camera with my echoey microphone, and that's just gonna kind of be what you're gonna get here, guys. Let us continue with this last 2 minutes here.
Bitcoin using this BlockFi link right here. It would really help me out a lot.
We didn't touch on this at all, but the thing I'm most excited about for this year is the Bitcoin Rewards credit card, which we're launching in the second.
Oh, now this is just a lot.
Now again, there are so many problems if you decide to get yourself a crypto rewards card. I just really highly recommend avoiding crypto credit cards. There's a lot of they're just terrible products, compared to, a conventional credit card. This is a theme on this channel too, is financial product reviews. And that's a big issue. It's just a big issue in and of itself. So let's continue here.
A lot more of the same junk. And once again, I mean, I would say this even more so. We have evidence that these people were just bad at predicting this stuff. They just had no idea what was going on. Because Andre Jick, for instance, said he keeps all his money on BlockFi, which
yeah, I mean, it's like it's basically like you should migrate most of your tokens onto a wallet you control. You do not want to trust people with all of your money when you do not have any deposit insurance on said money. If you've only got a couple $100 in crypto, it's probably not going to be the end of the world for you. But it's definitely one of those things to really, just be really careful about, because a lot of times people just do not have your, they just don't have your best interests in mind when they're trying to sell you these products. And again, you just kind of generally have to assume that people are trying to steal your money. As much as that sucks to say, it just is, it can't bear with enough saying that it really is just like people want to just steal your money.
Which just went under.
I keep most of my money, in fact, all of my crypto with BlockFi, both my Ethereum, my Bitcoin, everything.
Rip to your portfolio, my man. Now, I also want to say,
goodbye, $500,000. Goodbye, $500,000.
Kevin, I think, personally invested $420,000 into this platform, which cool number, I guess. So I think he also lost a ton of money on that. But I just think it's just a big lesson that you cannot take advice from these people. I know the parasocial relationship is there, and you start to feel that maybe they know something, but a lot of them are Googling it like 5 minutes before they go live. Okay, that's the truth of it. And I just think a lot of these influencers themselves should take a hard look at themselves, because as much as it's ridiculous that anyone takes their advice, they actually do. And it's going to hurt a lot of people for a long time. So that's basically it. I just wanted to talk about this because I think it's so important.
So let's just talk about some things that you can actually legitimately do to protect yourself from crypto Armageddon. One, actually make sure that you control your own keys. Shift to a wallet you control on your computer, something like Exodus. Highly recommended, because you're not going to be subjected to, this occurrence where someone actually, controls your money and you don't. That is one of the primary advantages of decentralized finance is, when it comes to a spending account or why it comes to any of these bank accounts, you really want to just have control over it yourself. Yes, that's just one of those things I want to continue to harp on is, you need to control your own keys. You need to be getting control of your money now if you are in a centralized exchange. Unless you're actively involved in trading, you just want to be in something like a Cardano, maybe Solana, where you just keep it invested. I mean, personally, my largest holding, because I just canned my ETH, is I have doubled down on good old-fashioned Cardano here, and it is my it's really the one I'm most interested in currently keeping or at least growing. So I do want to go very briefly into some of the stuff by Patrick Boyle as well, just because I think that would be useful to just kind of complement.
It involves a lot of the people I think a lot of my viewers might watch some of these people. So yeah.
You could tell us by your analytics. It wouldn't be too hard to find out. But I do just think that you really just need to watch out for yourself. And there's not a lot you need to do, but there are some things that you can do which will really protect you. And, don't trust people online. I know that's just don't trust other people online. I just cannot state that enough. Hello, Mrs. Geekat. Oh, this is actually like 26 minutes. Oh, how exciting.
Today's video is...
You got a refined British voice. That is going to probably tell us quite a lot of exciting things here, so let's continue.
Is sponsored by the Daily Upside, a totally free, high-quality daily business and finance newsletter. Visit the link in the description to learn more. A little over a year ago, Sam Bankman-Fried told the press that one day he hoped to buy Goldman Sachs and maybe the Chicago Mercantile Exchange. Of course, the people at Goldman and the CME would have been delighted to hear this at the time, as it was in July 2021, and crypto back then was really hot. Now, while many of my regular viewers possibly think that I avoided getting caught up in all of the excitement, I can't really lie, that's not true. I too was inspired by Sam Bankman-Fried, and while I didn't end up putting all
I didn't even know this guy existed. Even at the peak of my interest in crypto, I just didn't care about how it's really amazing how you can just live in this beautiful bubble where none of these people even really matter to you. With FTX, I mean, it's just like, oh, I guess that was nice. I mean, I've largely been unplugged for like the past year. I mean, the crypto mania in 21 was, it was a bit of an anomaly, but we'll see how this continues. I mean, again, the bankruptcy is not surprising. All of the things that have occurred here with FTX are pretty much following like the pretty predictable script of, hey, this is what happens when a bubble bursts and a market correction actually kicks in. So the correction itself has been particularly particularly strong, but let us advance.
All of my money in crypto or even advertising crypto exchanges in my videos. I did buy these New Balance trainers, and I was just sort of trying to be cool like Sam Bankman-Fried, and that is a shame that I will have to live with for the rest of my life. We all have our crosses to bear. I can only offer my sincerest apology.
So this is one of the things here with this Sam Bankman-Fried character. Like, I honestly, like, I just don't get it. Like, I really just don't understand how what is obviously somebody who's kind of a goober, by any stretch of the imagination, you know, suddenly became the guy we're going to listen to, and how this was going to be our great salvation. So, again, just stop making idols of people. Simple. No idols.
To anyone who saw me walking around in public wearing them. It was wrong of me, and I truly have no excuse. Now, unfortunately, the people at Goldman Sachs and the CME got some bad news this week. They will have to stay in New York, London, and Chicago, and may never get to attend one of those Bored Ape conventions in Miami that look like so much fun. It's less and less likely that they'll get to hang out with Michael Saylor attending parties in El Salvador either. As I've said, we all have our crosses to bear.
Well, that's pretty exciting.
Sam Bankman-Fried is the founder of FTX, the now bankrupt crypto exchange, and Alameda Research, the now bankrupt crypto hedge fund. That's a huge oversimplification of the corporate structure, just to be clear, as according to the FT, the corporate structure looks like this, with each box in that diagram representing a separate corporate entity. It looks like there are around 77 different companies in there, and it's reasonable to believe that the corporate structure may be even more complex than that. In fact, the FT is reporting this morning that there are around 130 affiliated companies referenced in the bankruptcy filing. As a contrast, here is the corporate structure diagram of Lehman Brothers, a global investment bank that was over 150 years old. And as you can see, it was a significantly less complex structure than FTX.
So that's the thing where, you know, this is where things start to go off the rails and they start to become a lot more convoluted. And I do just want to focus in on this for a second, is complexity is not necessarily complexity is not a good thing. Complexity does not make a business good. Complexity does not make a business more attractive. Good ideas should be simple. They should be easily digestible, and they should be communicated well. The only thing that a corporate structure like that suggests is a lot of financial engineering is occurring. And when a lot of financial engineering occurs, we can almost utterly be assured of some type or, some sort of, fraudulent behavior. That is, in the vast majority of cases, what seems like it likely to happen and what is most likely to occur. So you can't discount, issues related to financial fraud or financial chicanery or what have you. But I do think we're going to need to continue here and try to dive into, what is really, what's really going on here. So let us continue.
So anyhow, we have to simplify. Sam Bankman-Fried's trading firm, Alameda Research, allegedly owes his crypto exchange, FTX, $8 to $10 billion after taking loans that were possibly funded by deposits from FTX customers. This is all according to the Wall Street Journal. Both Alameda, the hedge fund, and FTX, the exchange, are controlled by Sam, who issued an apology.
That's definitely, just in terms of, fraud, fraud potential, the idea that basically the hedge fund, which is speculating and taking risk, like, alarm bells right there. Right off the bat. There is no... So, exchanges are meant to be independent of brokers in order for the exchange to actually set rules. So, I just don't see that as being, particularly mysterious, particularly, dire information. But the reality is, when you are looking at these firms, it is such a red flag. It is just like, it is a blazing, shiny red flag that is waving and waving and waving and waving. That can just not be overstated. But let us continue here.
On Twitter yesterday, saying that he should have done better, followed by some legal disclaimers that don't look like they were written by an actual lawyer. So FTX allegedly lent over half of its customer funds to Alameda, who then used these funds to bet on other cryptocurrencies and to help out other crypto firms that have been struggling this year. Alameda Research was run by 28-year-old Caroline Ellison, a diehard Harry Potter fan, according to the news. And listen, I'm not going to make fun of that, just because I haven't actually read Harry Potter. It's a children's book. It's for children. Look, I'm not making any of this up either, and I have to warn you that it's only going to get worse. The venture capital firm Sequoia Capital had a magazine-style article on their website, which has since been deleted. It read like a Dan Brown novel. I'm not sure that these people are big readers. And it was titled, "Sam Bankman-Fried Has a Savior Complex, and Maybe You Should Too." Luckily, before it was deleted, I took some screenshots. The article describes how when Ellison met up with Sam to learn about what he was doing in the crypto industry, she was dressed as a sultry wood nymph. Who even knows what that would look like? Well, they included a photo in the article, so there you go. Now you know what a sultry wood nymph looks like. You learn a lot on this channel. It's not just finance. But the article is not just sultry wood nymphs. I don't want to oversell it to you. It was tedious reading. But it goes on to describe how the partner side of the Zoom chat, the investors at Sequoia, lit up when SBF was pitching to them for investment. Partners were apparently freaking out. "I love this founder," typed one. "I'm a 10 out of 10.
I don't get it. I just still don't get it. Okay. Couple things here to the loyal viewership. Vision's irrelevant. Vision does not matter, and this is one of the things where it's like this wish of vision. It's tactical strategy and execution of the actual vision, and the only thing which matters is implementation and delivery of results. So I mean, this is how Sequoia, one of the most savvy investor groups, quote savvy, makes decisions. You should be a little concerned because, again, with the pitch end of the delivery, the 100% yes, sir, right away, sir. Vision is largely, it's largely irrelevant. Within the crypto industry itself, a lot of these promises, a lot of the growth, really a lot of the energy behind crypto, this forward momentum has really, it's really died out. There's not been a lot of growth. There's nothing promising about these, the future of money. And, it just is, this idea of, the cult of the founder, the cult of the investor. Who cares? It's not like it's, when you're making these big grandiose hypotheses, this cult of vision where it's like, oh, I love the future of fintech, the vision of money. Can't invest in the vision of money. Don't do that.
Another. Yes, exclaimed a third. They were reacting to the scale of SBF's vision. The article goes on to say that during the pitch, it was noticed that Sam was playing League of Legends, a video game. I don't know if this is a children's game or not. It could be filled with sultry wood nymphs for all I know. But anyhow, the piece goes on to describe how
I'm not going to call it a children's
game. $1 billion, which was followed by a meme round where $420.69 million was raised from, wait for it, 69 investors. I worry that we've drifted off from the central point of this video. How did all of this money disappear? Now, before I get into that, let me tell you quickly about today's video sponsor, the Daily Upside. If you find yourself sifting through multiple news sources, trying to find unbiased and insightful news, the Daily Upside might be the solution to your problem. The Daily Upside is a totally free daily email newsletter written by a team of financial professionals with real industry experience, and it's read by over 500,000 investors every day. It's become the first thing I read every morning, as it's informative, entertaining, and not dumbed down. They give you the most important news with real analysis. They had an excellent piece on FTX in yesterday's newsletter, which helped me prepare this video. Whether you're a financial professional or just looking for a great source of business news, the Daily Upside will help. It's totally free to sign up, and they send you one information-filled email every morning. I can't recommend it enough. Sign up using the link in the description below. Okay, so how did things go so wrong so fast? FTX was being valued by its VC investors at $32 billion.
So the thing is with these valuations and, what the market's going to bear, there's this urge to be disruptive, and it really just doesn't have a lot to do with, anything. Vision, while important towards getting funded, there's actually the strategic implementation inside the business where, once you start thinking about, is this a good idea? Is this what I should be doing? Serious questions begin to emerge within a lot of business areas here. So I would just, I would just throw that out there, but let us continue.
Only a few weeks ago, and it appears to be worthless today. It's bankrupt. Well, FTX issues a token called FTT, and this token might seem a bit like stock or equity ownership in the exchange, but it's not. Legally, a token like this can't be too much like equity or the issuer would get in trouble with the SEC.
Okay.
The FTT token is a bit more like airline miles programs. If you buy these tokens, you don't get an ownership stake or guaranteed interest payments from FTX like you might with a corporate security. You instead get perks like discounts on trading.
Magical. We're getting perks on trading. We're getting whimsy, and all of these wonderful things. Is that not simply the best? It's one of those things where, the biggest issue, or I would say the biggest series of things to actually confront is, there is no guarantee of any improvement coming from a lot of these things. And, just getting some discounts, ooh, I got my coupon card here. We're basically buying like loyalty rewards with the exchange. I just don't really, this, so it's really interesting how, after covering something, getting more into crypto, I could just live in total blissful ignorance of this guy. Isn't that just fantastic? Where you can just literally live and just pretend somebody doesn't exist. I mean, it is really just quite amazing, is it not? But I do see we're coming up on the hour here, guys. I do really appreciate everybody who's joined. And I hope you enjoyed this version of Skeptic Sunday. We'll be back on at 11 a.m. EST. Had a slight pause due to the wonderful world of work from our regularly scheduled content. We'll be getting that back up online soon. And I hope you guys enjoyed this video. Thanks so much. Have a great one. Bye.